Hello everyone, we're going to talk about Bitcoin, which dropped below $100,000, went down to around 98,000, and right now is trading at $103,666. Let me remind you that in previous reviews we were right here on the chart, and that was at $115,000. I said that if we don't break through 115,000 right away, the chances of a decline increase sharply, first towards the area of the 200-day moving average. And there we had two options: either continue to fall towards $102,000 or bounce back to the area of the 5-day moving average, let's say right here, to 113.5, 114. I still expected that we would be supported in the sideways range for longer, but the decline happened immediately. So, we will figure out what to do next. The very fact that we broke through all the moving averages and are now below them on the daily time frame suggests a further decline. But we have moved a significant distance away from the 200-day moving average, and if we close today's candle with a solid green body, the chances will sharply increase that we will head towards the $110,000 area to test this average once again. This doesn't mean that we will immediately move to this level, but the chances will increase significantly. If you want to take a long position, I would recommend not doing it at the candle's close, well, not at the closing level, but at least at its base, somewhere around $101,500 or maybe even $100,000. I think we will return to the 100,000 level again, and possibly more than once. So locally I expect growth. So why am I wearing an orange t-shirt with a bear on it, which suggests a continued decline? Let's take a look at the monthly candles. On the monthly candles, we see the following picture, which I have mentioned many times. The August candle updated the all-time high and closed with a solid red body. To be honest, I expected a downward move much earlier, but nevertheless, the October candle once again updated the all-time high and again closed with a red body. Yes, this is a candle of uncertainty. It mostly indicates a sideways trend, but paired with the August candle, it points to a decline, that is, a priority for a downward movement. This is not a guarantee. There are no guarantees in financial markets. And let's identify the next possible levels of decline on the monthly candles. Let's mark the most important key ones. The first level is $102,429. We have already tested it twice, but it hasn't been broken. As long as it hasn't been broken, we can't talk about a full trend reversal. Although the presence of a double divergence on the monthly candles indicates a priority for a decline, if this level is broken, then the next important technical level is, just a second, this one, $93,576. Well, we could also mark this one, hold on, $94,172. This is the opening level of the May candle this year, but they are close to each other, basically the area around $94,000. If we come here, then we will almost certainly see 93.5 as well. If we break through that too, then the next important support for us is this level, $82,500. That's it. On the monthly candles, we've marked the key support at $102,429 and the potential downside levels, $94,000 and $82,500. Let's remove all the markings and switch to the weekly candles. Here it's short and nothing but short. On the weekly candles, on the one hand, we've reached support, the 50-week moving average. On the other hand, we need to point out a very important feature. Look, I've mentioned it many times already. Right here, we were testing the 50-week moving average. Here, we tested it again for clarity, and here, once more, a third time. This is the fourth time. If the current week closes below the 50-week moving average, the chances of a move toward the $82,000 area, or 83, rise sharply. And we just saw that this level is important, and the target according to the monthly candles, or at least the midpoint between the 100-week and 50-week averages, that's around $93,000. And on the monthly candles, we talked about 94. So for us, three things are decisive. First, the closing of the daily candle. The main thing is that it doesn't close below $101,000. For a more precise figure, check the beginning of the video. Second, the closing of the weekly candle. It's very important that it doesn't close below the 50-week average, because then we sharply increase the chances of moving both to the 93, 94,000 range and to the 82, 83,000 range. And finally, the monthly candles. Yes, there are still a whole 25 days left until the end of the month, but nevertheless, we're watching the level of $102,400. If the monthly candle closes below that, the chances of a continued decline increase sharply. And with that, I'll say goodbye until the next review, which will probably be about the stock market. You can write in the comments which instrument or stock from the stock market you would like to see reviewed.